What's up, Stephen Johnson Stocks? Great to be back with you guys. Made $339 this week, and it all comes from taking better quality setups, and go more specifically into that in the Excel coming up, and throughout one long and one short in-depth analysis, which is a very, 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 very solid learning. And I just want to feel like what I've done is raised my standards and settled for less. So, but yeah, so be more selective with your trades. Don't settle for less. Be more selective with everything in life. Don't settle for less. Reach for the best. A couple of comments. Judy, you will reach your goal, but not with Tim Sykes. Sorry, I have to say that. Well, Judy, my goal was to be profitable over last year overall, and I did that, and I did it with Tim Sykes, so your comment's kind of wrong before it started. Elliot, multiple resistance timeframes, goddamn motherfucker shebang. That is fucking paramount. Listen to what I say in the next one. Are you profitable yet, Elliot? Let us know in the next video. Ryan, appreciate your videos a lot. Keep up the hard work and stay dedicated. That goes for all of you out there too. Goddamn motherfucker, I'll see you in the Excel. Shazam is an app. Much more solid week, and it comes from winning 60% of my trades. I took 10 trades this week, won 6 out of 10, never down more than $60-70 at any one time throughout the week, and generally I was risking like maybe $50-60 to make a few $100. So much better risk reward, 3-to-1, 4-to-1. It all comes from just going long, yes, support, multi-day, multi-week, multi-month on the different timeframes, and going short at resistance on the multi-week timeframes, and ignoring any shit in the middle. And even if it's a good intraday setup, just not taking it, because it's not a good overall setup. And when you do this and you take less trades, you have less risk. Your probability of making good trades goes higher, and you start making more money with less risk. It's fucking stupid. You get yourself in less stupid situations. So much better to make like 340, and once I get over 26,000, then I can start sizing up again. And I mean, as overall profitable last year, it's just a fun challenge now. It'd be like, when can I get overall profitable in March? And then once I make this back, more overall profitability on the year, then I'll start really scaling up to go for that 10k for the year, 20k for the year, and then next year, the year after, I can go for like say 100k. And this is the dream. It's very much coming together, very much within expectations, and it's 100,000% happening. And then after the next year, when you make 100, then you make 200, 300, then you try and make the million. So takes time, takes a long time, takes dedication and effort, but the stats prove it's very much there. Just watch your winning percentage. The minute I'm not winning the majority of my trades, I've got to scale down. Something's wrong with me trading. And I didn't realize that I was making mistakes in January, and I just took big losses. The other thing was, you've got to minimize your risk significantly. I was like, I'll just risk $1,000, and if it fails, it fails. But this week I proved that I can really make money with minimal risk, and this is the cornerstone, and this is a major lesson, and this is why this big loss on the first week of Jan was actually a very good thing. So this is NYSE, and it's a funny chart because it's like it's all the way up and then it's down and then it's up. It's making these crazy moves, and you're kind of like, well, how on earth do you play this? And I mean, maybe it reminds me of other charts, like, is it CNET? Like CNET's the same. It's like up and then it's down, and it's up, down, up, down. It's like, well, look at all these gaps where it's gapped up and gapped down, and you're like, well, how do you play this? Maybe IZEE, the recent Bitcoin stock, might be a little bit like this. Yeah, I mean, look, it's like up and it's down. You've got these big gaps, big gap, and you're kind of like, well, where the fuck is support and resistance anywhere on this? But there is huge, tremendous volatility in these stocks. I mean, from 70 cents to $3.50, and some of these moves, even not taking into account the gaps, even the move from kind of, if you catch it, from the 280s, 218s to the 250s, anything like that. I mean, it's a super volatile move. But you've got to look for the longer term support to play off. So you're thinking, well, where is the support to play off? Because I was buying it on this day here, which it seems very random. You're like, well, where's the support? If you're buying it in the kind of the two, like on this day when it went from the 220s to the 3s, and it's crazy, but you've got to like look all the way back. So if we go all the way back, you can see that there's some resistance. Like it kind of broke through and topped there, but it topped there at the 320s, and then if you go back, it's obviously it got up to the 350s, but it came straight back down. So we can kind of think that, okay, the 320s is an area where it might peak out, because that's all we've got, because it's kind of in unknown territory up here. And then the next thing you want to look at is where can I buy? And the best way to trade this, is, especially because it's a choppy stock, is probably on the 5-minute time frame. So just looking at it from a different perspective, it had its big pre-market ramp, which was this day here, and then it's squeezed and gapped up the next day. So everybody's watching it thinking, well, if it can break the previous day's highs around the 240s, then it can run to around the 320s, because the 320s was the longer term resistance that I've shown you guys. And traders, the more experienced traders, are looking at anything they can get their hands on, and they're all going to stick to the levels. So, but here it was nice, we got the gap up. And remember, yesterday's highs were the 240s. So if we just mark it out with a line, so don't get confused later. It should be yesterday's, it should be the overall resistance, but 1 day resistance isn't really much. So if it can get through them, it's got a good shot of running. So what we're looking for at the open is it's already gapped up. So we want to see a little push, not a mental push, not any kind of parabolic, but a little push. It holds its higher low, and then we're looking for kind of an inflection to buy off. So we got the little ramp in the morning, and this isn't anything crazy. It's from the 215s to the 240s over. This is a 5-minute chart, 5, 10, 15, 20, 25, 30, 35. It's not anything big. But then we had it based. It made this higher low because it was basing pre-market in the 210s, and now it's basing in the 225s. So when it kind of pushes a little bit, and we get this little flag, this little inflection, and you've got the fact that you're buying off the 5-minute 13 moving average, then you can start to think, okay, this looks like a good entry to buy. So it's like, again, look at the inflection in volume as well. As soon as big volume came, I mean, I was actually buying 237. As soon as the big volume came, it was on the 5 EMA, it had made the higher low. It was a nice buy point after what was about 30 to 40 minutes of consolidation. It had tightened up, it was getting tighter. Like you have these big candles here, then tighten. It's deciding where it wants to go, and then the volume shows you where it's going to go. So as soon as you get the push and volume to the upside, it's decided to go up with big volume. And for me, I'm ready, and here's the breakout point as well. I'm ready to buy it just before it breaks, because I've got so much support here. If it breaks, you're going to chase it. If you wait for it to break in this situation, you're going to chase it. But when you're buying off the 5 AMA and 40 minutes of consolidation, and it's not that much overextended, and it's just tightened up, it's okay to buy it just before. If it slams back, you've risked only a few cents. But if you buy it up here in the 250s and it comes back down, you get stopped out, and then it actually makes the move. So it's better to buy it directly on the inflection point here, just before the actual multi-day breakout. I bought it at 237. I was out at 249 quite quickly because it was looking toppy around here. And then, of course, it came back down to the AMA and ripped all the way to the threes. It failed on the whole dollar because we're thinking that it's near longer term resistance, 320, and it's the whole dollar as well. So it failed on there. But it's a solid solid trade, solid read, a solid way of deciphering the multi-day chart, and a solid lesson. Nice to get another kind of 200 plus win, first one in a while, and if I keep on having these 200 plus wins, 300 plus wins, size up a bit more, Then I'm right back into business having 600, 700, $1,000 weeks again. Because this is my favorite pattern pretty much, a short into heavy long-term resistance. And if you go back on the year, we're not just like you saw on just the other trade on MYSZ. We were going long because there was only 1 day of resistance. But here, there's insane amounts of resistance. Like, look at all of the tops and the threes. Horrendous gap down on bad news. Then it's topped again in the threes, the 320s, and it's 320s across the board. And I can draw a line on for this. Horizontal. And then it's kind of based, and then it's gapped up again and failed and gone all the way back down to the 2s. So anytime I see it anywhere near the 280s, the 3s, I'm thinking this is a guaranteed fail. Especially on the news, which isn't that good, on super low volume. You've got to be an idiot to go long on this, as far as I'm concerned. So when I was buying AEZS, when I was shorting it, I was really gutted that I missed this. I would have been straight into the 3s. Very typical. It actually opened at 320 and it immediately fell because that's its super long-term resistance. I was racing. I was absolutely, if I'm being honest, it dropped, popped back up. I was racing to get in the 280s, and I was planning on averaging up as much as I possibly could in the 290s and the 3s. If, God forbid, it broke the 320s, which I think is a 1 in 100 shot, I would obviously be cutting out and covering at 320 over and under. But what you've got to think is, on very weak volume, it had only traded, say it trades a couple of 100,000 shares by this point. It traded about 100,000 shares. By the market open, it traded about 400,000 shares. So if it's traded 400,000 shares on a 16.4 million float, how the fuck is it ever going to break its multi-year? How the fuck is it going to break its multi-year resistance, which it's failed at about 50 times, when it's trading 300,000 shares on a 16.4 million float, downtrending in pre-market? Like, it's just never going to happen. So for that reason, this is by far my favorite ever short pattern. So I was going in as much as I could buy. I was shorting as much as I possibly could. At around the 280s, I was short, dropped a bit, and then I popped back up. I was desperate to get adding that 290, and it topped at 289.68, and then it just washed all the way down to I was out in the 250s because I was like, whatever, I may as well just take it off. I'm up $200 and it's the open. And then as soon as it pops back up to the 3s, Interactive Brokers didn't have any more shorts. I would have been straight back in it, knowing that it was bound to fail in the 240s again. And that's exactly what it did. So, textbook fail biotech. This is by far my favorite short pattern. And I knew to get out in the I was planning to get out in the 250s, because you've just got to look at the longer term support again. I mean, we can see that, well, quite clearly that it's topped. It's kind of opened here, and that, well, I'll draw the line so you guys can see it a bit more clearly. Because you're thinking, where's the gap that I want to short between? And it's kind of, it opened here in the 240s, then it topped here, then it topped here, and then it's topped around here a couple of times. So it's probably going to support around here, exactly at 244. And if you look, it bottomed just below, like a few cents below, before it ripped up and then came back down to the 240s. So it's all just playing in between support and resistance, and it's as simple as that. But you also obviously need to understand the bigger picture of what is its overall resistance level. Has it got the volume to break it? Do you think the news will break it? Has it failed many times before? And you've got to weigh all these different variables up. You could call them indicators as well. And that's a wrap. I just want to say, keep on studying, keep on raising the bar, keep on raising the standards, and I'll not keep you too long. I've got